G'day folks, welcome back to Pete's Investing. Got a new format for you, looking at 4 commodities or 4 instruments here: natural gas, iron ore, copper and crude oil, doing a technical analysis of these. We're also including, as always, the table of trends, looking at the monthly, weekly, daily trend table. So today we're going to be covering, as I said, the first 4 there: natural gas, crude oil, high grade copper and iron ore. And you can see there today, for natural gas, the overall trend is monthly is short or bearish. On the weekly it's neutral, and on the daily it's slightly moving to the long side. And I won't go through the rest of them, but you can see there crude oil is the only one that's showing all bullish movement across the board. High grade copper is broken down into a bearish momentum on the daily after being long, and iron ore is mixed with a neutral and shorting position. So looking at natural gas first, this is the daily chart and the hourly chart. So on the daily, first off, we're looking at our CCI 1500, and that's one of our indicators showing the trend. And you can see there, when it breaks below the band of moving averages, that's a bearish momentum. At the moment, we're still bearish somewhat, although it's broken up into a slightly neutral positioning on the CCI 1500. The CCI 150, likewise, is pretty much neutral, moving sideways after breaking above these moving average bands in the short term. And also notice it's actually bounced off this support at 1584, but notice it's still below the VWAP trend line, so still fairly bearish on the daily. Over here on the hourly chart, we do have this stochastic market forecast indicator, and when it's above this level up here, plus 90, it's overbought and is starting to weaken. If it falls below about the 75 level, or even especially below the 50 level, and likewise at the moment you can see there it's broken above, being oversold. So we may see a bit of a bounce, although the price has come back a bit. Now if I zoom in as well, we've got the CCI 150 here. Again, we use this as a divergence indicator. You see we had a bearish divergence there with lower highs on the CCI versus high highs on the price. It broke down, hit our target. We did have a small bullish divergence there versus the price, bounced up, and it actually traded in this trend channel for a number of hours or a number of days. Now, I've kept those trend lines in there for a reason, because it may actually gravitate back to those in the future if it breaks much higher or lower. But at the moment, you can see there, if I draw another trend between those highs there, you can see there it breaks through those points there. And we're currently in this little channel here. So again, if it breaks much higher than that, it may go back into this upward moving channel. But at the moment, it's stuck in this lower channel in the short term. So just be careful. There is no divergence to talk of at the moment. The CCI is trending in line with the price. But overall, you can see there it's broken up from the oversold, and we may see some slightly more bullish movement, especially if the daily CCI 1500 breaks and up through this moving average band. Next, we're going to cover US crude. So for US crude, you can see there on the daily, it's broken up in a bullish movement on the CCI 1500. The CCI 150 likewise is moving up, and it's actually broken and moving above the VWAP trend line on the daily. We've actually had these trend lines drawn in there, these diagonal trend lines. It's broken up through this minor resistance area, 80.50, so that's a positive. On the hourly, we're in this range now where it's potentially overbought, so we might see a bit of a retrace to the downside in the short term. If I zoom in, we did have a bearish divergence here on the CCI 150 versus the price, and it's actually come back down into the target area. Remember, the target area, for those new to the channel, we draw a Fibonacci retracement from the previous low before the divergence started, and we basically look at a target area between the 23% down to the 38% level, and that's where that support line was at 80.50. So it's actually hit our target and bouncing from there. Now, of course, it can go lower, but at the moment it's bouncing off that area, off that 38% Fibonacci retracement, and making further highs. So that's a bullish movement across the board. Next, we look at high grade copper. And for high grade copper, you can see there on the CCI 1500, bullish movement, although it's come a bit of a retrace. The CCI 150 is broken through the moving average band, so just careful about going long. We want to see that break above the moving average band there, and that's on the daily. On the hourly, if I zoom out, you can see there it wasn't overbought, and it's actually pulling back at the moment, and it's actually gone and approaching, broken through the 75 level. If it breaks below the 50 level, we're going to see a much more bearish outlook, but at the moment it's still in a somewhat neutral positioning, or bullish, more bullish than negative. And if I zoom in, we did have a bearish divergence here on the CCI 150 versus the price, broke down, hit our target. Now there is no divergence currently in play, so it may have actually finished, but we want to see that break higher and break above this resistance to be more bullish. So let's keep an eye on that as well. And lastly, the iron ore price. You can see that's broken down through the CCI 1500, very bearish, although the CCI 150 is actually broken into that moving average band, so you avoid taking short positions until we see that break below that again. Alternatively, to take long positions, we want to see it break above this moving average band of trend, also below our, very strongly below our VWAP trend line. Zooming out on the hourly chart again, it was in this overbought, broke down past the 50 level, and you can see there that was where you possibly could have taken some short positioning, and that aligns with that positioning back there on the daily chart. But at the moment it's bouncing up from that minor support at 749, and that is a result of this bullish divergence after that lower lows on the price, and it's actually making a retrace to the upside. And again, if I was going to draw a target area, I'd take it to that recent high before the divergence started, and that would have been the minimum target level, which was between the 23 and the 38% level. In this case, it's stopped around the 38% level. It may retrace back to the downside, or it actually, if it breaks through higher than that 61%, then we're going to see a more bullish movement happening on the hourly at least, but we want to see more bullish happening on the daily past this level. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.